Hi there, welcome back. We're watching Market Fatafat on ET now. Let's bring on board Sneha Seth now, Senior Analyst, Technical and Derivatives at Angel One. Sneha, thank you so much for joining us on the show. And let's talk about the first stock you've picked out for us, and that's Jubilant Foods. Now, amid the QSR space, it seems to be one of the only stocks that's actually doing well for itself. Tell us on the technical front, or what momentum are you seeing for this stock?
Good afternoon. Now, if you look at the chart structure, we have seen a very strong rally continuously. The stock has been trading above the 20 DEM on the daily chart. It had a resistance around 650, 655 odd zone. This counter has surpassed those zones, and I think it looks poised for an up move at least towards 680, 685. So I would recommend if someone wants to go ahead and long this counter, can go ahead with a strict stop loss of 644.
Out on those levels over there for Jubilant Food, but see a lot that's happening in the jewelry segment and jewelry space as well.
Absolutely, and well, one stock to talk about today from that space is Kalyan Jewellers, Vinny, because that stock is also doing pretty well in today's trading session. Let's understand why, and it's 7.5% higher as of now. Kalyan Jewellers had 5.73% of equity traded in 5 block deals this morning. A special purchase agreement has been signed between the company's promoter T.S. Kalyanaraman and Heidel Investment, in which the promoter seeks to increase his equity holdings by 2.36%, purchasing shares from Heidel Investment at 535 rupees per share, and this entire deal aggregates to 1,300 crore rupees. His stake will rise from 21% in the company to 23.36%, and the combined shareholding and promoter and promoter group holding will go up from 60.59% to 62.95%. This is what the company has said in an exchange filing. Street is taking this news rather positively because the promoter is looking to, in fact, has increased stake, and 7.6% higher is where Kalyan is as of now.
Okay, on that note also we managed to speak to the management of Titan, the MD C.K. Venkatraman, who expects that they will see an improvement in every vertical. What more did he have to say? Listen in.
One of the things which has been in the making, in the building, is actually the differentiation that Titan brings into every category that it operates in, into the wearables category as well. And we expect to see some strengthening of all that during calendar 24 and early parts of 2025. This is a category that we were a late entrant into, as we have spoken even in the past. And to that extent, it has taken us a little longer to build that differentiation. And it is through that differentiation that we will build a business which is very strong in a customer value proposition front and delivering reasonable returns to the company and in the overall portfolio as well. And we expect to launch, there are many new products which are fast tech, as I would call it, bringing in the technology and fashion combination in the smart wearables line up in the next many months. And through that, we want to build that differentiation in the market and do better than in the past.
All right, that's the word coming in from the management of Titan. But Gaurav, you've picked out Paras Defense for us. Tell us why this stock is in news today and why you've picked it out for our viewers.
Yes, Paras Defense is in focus because now Ministry of Commerce and Industry has now granted industrial license to the company for establishing, undertaking manufacturing of infrared image equipment, subsystem of radar system, laser range finder, advanced computer based and control monitoring system, and many other products which are related to the defense system. Now this license will allow the company to manufacture such products for the next 15 years. So this will create another avenue for revenue for the company. And apart from that, there is another news flow which is coming in from the company, is that they are going to hold the board meeting on 27th August to evaluate a proposal for raising funds in one or more tranches via private placements, rights issue or QIP. So definitely one stock which has to be in focus is Paras Defense, because when we talk about the stock performance also, it is now locked in upper circuit of around 5%, and given that there is 2 positive news flows coming up for the company, definitely watching out on this counter.
Surely keeping an eye on this counter. Let's move on and talk about P&G Health that reported its numbers last evening. Not that much of an excitement that we saw coming in from the numbers for this quarter. Revenue saw a decline of around 6%. We're seeing the profits of the company down by 43.7%. Net profit coming in just at 16.8%, 8 crores versus 29.8 crores last year. So yes, a sharp decline in terms of the profitability. Margins, on the other hand, we've seen a slight bit of an increase there, around a 190 basis point increase in terms of the EBITDA margin, 17% versus 15.5% last year. On an absolute basis also, the EBITDA has come in and seen a growth of 6.4%. But the top line and the bottom line, that's where the pressure came in, and P&G Health as of now is down almost 2.5% in trade.
All right, let's move on. Talk about yet another big buzzer, and that is Shyam Metallics today. And this is on the back of a brokerage note coming in this morning. You have UBS that has initiated coverage on this stock with a buy rating and a target price of 1200 rupees per share, which is a significant upside from where the stock is trading right now at 809 rupees. Now, they believe that the company is on a high growth and transformative journey, and the company is also moving up the value chain while driving efficiency at every level. Strong earnings have accelerated the visibility that the company provides about the future, and they also believe that the market is not yet fully appreciating its integrated operations. So on the back of this, UBS, a very bullish note coming in on Shyam Metallics today, initiated a buy rating, target price of 1200 rupees per share.
Okay, let's move on to the next stock, and Gensol Engineering. Gaurav, that's the stock you've picked out for us. What's the news flow here today?
Yes, Gensol Engineering is in focus because the company has bagged a repeat order which is going to be worth 40 crore rupees for a rooftop solar project from leading textile company. Now they have received a letter of award for execution of around 16 megawatt of turnkey EPC rooftop solar project which will be situated in Madhya Pradesh, and this project will be commissioned in the next 6 months from the company. Now what management believe is that this repeat order actually shows a company's ability to execute complex projects at a scale in a seamless manner within the stipulated timeline, and that is why they believe this is actually a positive news for the company. But when we talk about the stock performance, it seems that the market has not taken it in that positive way because the stock is down almost 0.7%. But definitely watching out on this counter on the back of the repeat order that they have received.
Alright, so watching out for Gensol Engineering in today's trade, and Sneha, you've picked out Bharti Airtel for us. Now when I take a look at this on the charts, last 6 months 30% return is what the stock has given. Where do you see the stock headed from here?
If you look at the chart structure, it is quite, it's very strong. In fact, continuously counter has been trading above 20 DEMA. So any counter trading above 20 DEMA on the daily chart, it is said to be very positive. So I think we may soon see it heading above the recent highs, which is around 1480. So which is above like 1540 odd zone. And look at the options activity also. It seems that we may see an up move beyond that zone even. So someone who's holding this position or someone who wants to take a very short-term trade can go ahead and long this count.
Okay, let's move on and talk about two other stocks that are in focus today, Deepak Nitrite as well as Deepak Fertilizers. Both are buzzing in trade. We've seen that IIFL Chemicals, actually what came out was yesterday that DGTR and the Ministry of Commerce has recommended an anti-dumping duty on IPA originating in and exported from China, and now it requires approval from the Ministry of Finance for such implementation. So this turns out to be positive for both Deepak Nitrite as well as Deepak Fertilizers. Both were buzzing in trade, early morning trade. We've seen that a sharp spike up there, and then you see that we're seeing a bit of a fall. So now both of them are trading quite muted. But yes, DGTR has recommended a duty of around 217 metric ton per metric ton for imports. This is $217, which I'm talking about, which is from those companies in China, and imports from China nearly doubled in FY23. So yes, that's an important one. That's why this anti-dumping duty, keeping an eye on both these stocks going forward.
Alright, well, watch out for both of these stocks today, but we also spoke to Amit Khurana, head of equities at Dolat Capital, and he shared that the chemical space is the only space that has been upgraded from their side. Let's go across and listen into which stocks they are preferring in the chemical space and what's driving this bullishness.
Chemicals is the only sector which has possibly got an upgrade from our side, other than the consumption names that we are backing up. Essentially, it's a play that most of the capex programs for the companies are going to get done away with FY25, and largely we've seen inventory corrections, and especially in some of the specialty pigments, specialty chemicals, some of the categories seem to be showing a much better visibility on sustainability of price and the demand environment. Now, this is a very, very early view that we've taken, so it probably will require a much higher level of patience for these stocks to perform. Some have re-rated very materially. Specifically on this duty, it benefits Deepak Nitrite much more. Overall, our preference is to play the chemical sector more from a bottoms-up perspective, given the very varying business models that you have, and each product has its own nuances to capture. So at this stage, we prefer Atul and Sudarshan Chemicals. We also like Pine because the balance sheet is well capitalized, very strong balance sheet in terms of cash on the balance sheet, overall capex plan just about starting. So these are some of the names that we have backed up in the last few quarters and continue to back up those.
Okay, that's all about chemical sector and the stocks that are there. But let's move on and talk about Eris Life Science, Gaurav. What is the reason that you've picked this stock out for us, and what is it doing in trade?
Well, yes, this counter is in focus because a substantial block deal actually happened during a pre-trade session today, where 98.9 lakh shares actually exchanged hand, which is almost around 7.3% of the total equity at a price of 1201 rupees per share. Now, the total deal size is expected to be somewhere around 1187 crore rupees. And when we talk about the stock performance also on the opening trade, the stock went up almost by 3%. It has now given up some of the gains, but still trading up at more than 2% levels. Let's not forget that in July, we have seen Franklin Templeton actually raising its stake by acquiring almost 0.8% of equity further, almost 109%. Now, we do not have the buyer's name yet, but it is worth noting that on the back of the block deal that happened, the stock is reacting on a positive note. We also know that the company is meeting with some of the institutions for the further meetings, so definitely watching out on this counter.
Alright, so well, that is the reason why Eris Life was in today's trade on the back of those block deals that we did see coming in the morning. But on that note, we'll slip into a short breather on this edition of Market Fatafat. More stocks to talk about on the other side of this break. Hi there, welcome back. So watching Market Fatafat on ET. Now let's take it across to Sneha now for her technical pick, PVR Inox. And Sneha, when I take a look at the YTD performance or the 1 year performance, negative returns coming in for this stock, do you think it's a good time to buy this stock now?
If you look at the chart structure, we have seen decent profit taking. This was followed by some consolidation. I believe any move beyond 1560 would be very interesting to watch out. So in case of any move beyond this, we may see some momentum. However, if you look at the chart structure, it has also managed to surpass the 200-day simple moving on the daily chart, which is interesting again. So if someone wants to go ahead and long, I think the momentum may come above the 1560 odd zone. But again, still someone who wants to accumulate this can think of going ahead and taking a long bat with a strict stop loss of say around 1440. So any dips can be bought in, and any momentum based trading, if someone wants to do, it should be only happening above 1560 zone. So that is the level one should be watching out.
To watch out for when it comes to PVR Inox, let's talk about BEML, because that stock and that company and Malaysia's SMH Rail have signed a memorandum of understanding, an MOU, and under the terms of this MOU, BEML and SMH Rail will leverage their combined resources to enhance capabilities in marketing, manufacturing, maintenance, repair and overhaul MRO services. The partnership will also encompass joint efforts in design, engineering, manufacturing and the integration of rolling stock tailored to meet specific client needs. This collaboration is set to provide significant cost optimization through joint research and development, particularly in sourcing the rolling stock aggregates and subsystems, and the companies will also be working together to formulate effective marketing strategies and share technology on a mutual basis. Lots has been happening when it comes to tying up with Malaysian companies. We also have a few other stocks today in focus on the back of that, but well, yes, BEML is one such stock and almost 1.5% higher in today's trade on the back of that news flow.
Okay, surely keeping an eye out on BEML, but let's move on and talk about PNB Housing. That's the stock we're keeping an eye out on. Yesterday also we had spoken about how there was a block deal that happened there and West. Now we know the sellers of the block deal. So what we are seeing coming in is that Asia Opportunities 5 Mauritius Fund has actually sold shares in the company. So we are keeping an eye out on that one. It is around a 715 crore worth block deal that has happened. Let's keep an eye out on this one. So yes, because of that, we're seeing the stock is under pressure, and that's what we'll be keeping an eye out on. Other than that, some of the other names that came in also. This is for today's block deal that I was talking about. Now, yesterday's block deal was also where General Atlantic sold around 1.33 crore shares in the company. Pioneer Investment is sold 6.2 lakh shares in the company as well. So keeping an eye out on this one, we have the buyers coming in at Government Singapore, Aditya Birla Sun Life, as well as HSBC Mutual Fund among some of the buyers for PNB Housing. This was yesterday's block deal. We have seen today also a block deal happen, and which was the likely seller is, according to agencies, is Asia Opportunities Fund. So keeping an eye on that one.
Alright, lots of stocks changing hands when it comes to PNB Housing, but Sneha, you've picked out Chambal Fertilizers for us, and in the last 1 year itself, the stock has actually doubled. Do you see this momentum continuing on the charts, or are you penciling in some kind of breather coming in on the stock momentum?
See, if you look at the chart structure, we have seen a very strong comeback, like the counter rebounded from 400 odd levels, now trading around 500. It has moved towards 570, 575 plus levels even. So we are seeing some consolidation after such a strong move. But I think any move, and especially last 3 sessions, if we see, we have seen a very strong up move, and this has been supported at volumes even. So I would recommend, if someone wants to go ahead and long, I think any move above 535, 537, which is today's high zone. So any move beyond this would be very interesting, and we may see a sharp momentum coming in, and we may even see this counter hitting fresh record high. So if someone wants to go ahead and long any fertilizer counter, this is the one counter which I'm liking. It had made a strong base around 480 zone. So anyone who's holding along with a strict stop loss of 480, it's a buy. And someone positionally also, if someone is holding for a short term, the stop loss can be maintained around 480.
Okay, let's move on to the next stock. And Gaurav, Union Bank is the stock that you've picked out for us today. What's the news flow here?
Union Bank actually held its analyst meet, and they have actually given some key guidance when we talk about FY25. So now bank has guided around 11 to 13% loan growth for FY25 versus what we had seen at 14% growth in Q1 FY25. Other than that, now they are expecting deposit growth to remain somewhere around 9 to 11%. They are expecting NIMs to remain somewhere around 2.8 to 3%. And when we talk about LDR ratio, the bank's LDR ratio is currently at 72%, which still has some room to improvement, and they expect this to go above 77, between 77 to 78% going forward. Other than that, they have also made some of the key statements. So they acknowledge that the mobilizing retail deposit is actually a challenge for the bank, but what they believe is that the recent capital raise will actually help the bank to limit their margin pressure, and from here on we may see some ROA somewhere in the range of 1 to 1.1% for FY25. They also aspire to sustain their net NPAs below 1%, which will actually help their credit quality. So on back of this, when we talk about brokerages, now MK actually cut the target price to 130 rupees, but when we talk about the stock performance, the stock is up almost by 2.5%. So definitely watching out on this counter on the back of the promising guidance that they have given for FY25.
The reason why Union Bank isn't focused on the back of its analyst meet, but Sneha, Hindustan Petroleum, you've picked this out, and when I take a look at this also on the charts, last 1 year more than double in the stock price is what we've seen. So what are you suggesting for this stock now? Time to still buy, still accumulate this stock, or now would you wait and watch on this stock?
Looking at the overall chart structure, it has given a very strong up move, but overall recently we have seen some consolidation, and after testing the 20 DEMA on the daily chart, this counter is again rebounding and looks poised for a follow-up move at least towards 440, 450 odd zone. So someone who is holding this counter may continue to hold, and for now the supports has been shifted towards 70, 75 odd zone. So if someone is long, should be keeping a strict stop loss around 370, 375, and maintain a positive trade, or any long position someone is holding, they can continue to hold.
Okay, surely keeping an eye out on that. But Sneha, two stocks and interesting ones. We were all waiting and watching out for this one is Zomato and Paytm. That deal finally has happened for the movie ticketing business. Now, We'll be
Yes.
ordering tickets on Zomato as well. Seems like that's the
Well,
new
seems
trend.
like that, yes, because lots of exciting buzz was created around this deal, and now this has finally come through. And Zomato has acquired Paytm's ticketing business, and let's understand. And this is for a little bit more than 2,400 crore rupees. But let's understand what the brokerages are making of out of this, because if you see Paytm's chart as of now, Paytm at one point in the trading day was higher by 5% and has erased all of those gains. In fact, reversed and is lower by 5.5% as of now. Zomato rather flat in today's trade. First up, let's understand what brokerages are talking about Zomato. We have a Jefferies note coming in. They've maintained a buy rating, hiked the target price to 335 rupees from the 275 earlier. What's interesting to notice that this is the highest target price that any brokerage has given for Zomato so far. Last week, UBS had given 320, and now Jefferies has surpassed that also with 335. They believe valuation looks compelling in the context of growth forecast and ultimate margins. Like the food delivery business, the low capital intensity of this business also promises high return ratio, and the steady state is also being seen. A third clear growth vector has been established for the company, and this will probably focus on market share with even the potential to claim leadership. So this is what Jefferies has to say on Zomato. But on the flip side, you have a Citi note coming in on Paytm. They've maintained their sell rating but have nominally hiked the target price to 440 rupees from 410 earlier. They view the sale of its entertainment ticketing business to Zomato as a positive. The deal value is higher than the implied value of the business, and the next trigger will be the government approval of the FTI for payment aggregator. Now, they're also saying that this deal will allow the company to focus solely on its payment aggregator business as well. So, well, on that note, you have both of these stocks, the buzz. Zomato rather flat, but Paytm down and out almost 5.5%.
Absolutely. But let's move on and talk about the next stock on technicals. And Sneha, you've picked out ICICI Bank for us. What are the charts indicating for ICICI Bank now?
If you look at the overall banking index, we have seen Nifty surpassing the gap area, which was there on 5th of August. But banking index again still is struggling towards that gap zone. So any follow-up buying in banking index above 51,000, 51,200 would be interesting. And looking at the overall private sector banks, which has been consolidating, I think looking at the options activity in today's session, it seems that we may soon see banking index surpassing those zones. In ICICI Bank itself, if you look at the options activity, we are seeing some unwinding in out of the money call option like 1200 and above call options. All these strikes we are seeing decent unwinding. So I think we may soon see ICICI Bank coming up out of the congestion zone, wherein on the higher side 1195, 1200 was acting as a resistance zone. So looking at the options activity, I think we may soon surpass 1200 mark and head towards 1240, 1250 odd zone. So if someone wants to go ahead and long banking index, I would suggest buying 1200 call option of ICICI Bank in that case.
That is ICICI Bank, but that was the last stock for today. So we are absolutely out of time on this edition of Market Fatafat. Thank you so much, Sneha, Gaurav, as well as Aditya for joining in with us on the show today. And it's a goodbye from Sneha, myself, as well as the team who put this show together.